Hello, everyone. Welcome to Smart Investing. This is the third topic, and the third topic that we have is business in general. We're going to talk about a little bit of trends and what's doing good in business right now, and what are the bad sectors in business right now, in the past, and maybe in the future as well. First things first, disclaimer: I'm not a financial advisor. I'm not licensed or insured. Any final decision that you make, please consult somebody who's a financial advisor. Investing in the stock market and investing in general carries great risk and reward. So please consult a professional, supposedly a professional. So take that into consideration when you make a decision. There we have it. So, moving on from the disclaimer, we have business in general. Business in general, let's say this. I didn't get into the finance industry up until it was the 2010s. It was in 2013. I moved to Florida, quickly realized, 401ks, you know, taking money out of my check and, whatever, it gets a certain portion, whatever. Questioned it. Who has this fund? How can I get in touch with this person? I don't know who's managing this fund. Like, who is managing my money for my retirement? Like, seriously? Like, how do I know this person is going to do well on my behalf, or what they're actually doing and whatnot? And all they do is put in a S&P 500 benchmark and probably choose one or two stocks throughout the whole year just to beat the market, and that's pretty much it. That doesn't fly by me. If I'm gonna lose, I'd rather lose myself, and it is what it is. If I win, I win. Win some, lose some. That's the way a lot of financial advisors adhere to their clients. It's not like I can call my broker or call my advisor. Things just don't work like that in the 401k. They give you no due diligence. It's just, take your money and then that's it. All said and done, put it away. I could not live with a system like that. So I'm glad for financial apps such as, Webull and Robinhood. And then again, they give you only a small portion of educational source. So when it comes to that educational source, we didn't learn this growing up. They don't teach this in schools. You have to learn this on your own. So aside from that, people, get their MBAs and they learn about business. And then what people fail to realize is that people grow up with this as they grow up. It's not like, you've never seen a small business. People have walked into gasoline stations. People have walked into restaurants. People travel. People do all this kind of stuff. So, fast forward, anything was good to pick. I mean, as they say, on Wall Street, even a blind, even a monkey blindfolded has a few darts in his hand and can put the newspaper up on the wall and throw darts at the newspaper, and it could land on any given stock written in that newspaper, randomly lands on any kind of stock, and they still did good for the next 4 or 5 years because the trend was always bullish. And again, that had to do with the whole money printing, even up until now, 2024, the whole money printing. So If anybody wants to claim to be a guru, I challenge them that they are not. Let's see how you do in a downtrending market. See if you can make money. So aside from that, when it comes to business in general, any kind of industry would have done good. 2020 is when the game changed. 2020, you had healthcare that was doing good. AI was doing okay. And then what other sectors were there? Communication services were doing pretty good. So fast forward to 2024. You had the Mag 7 do good, so you have the AI selected few that have done good within at least the last 2 years, over double-digit growth rates, and they continue to excel. We've had recently where one or two tech companies are not in the NASDAQ anymore. They have moved to the Dow to give an equal weight balance, and now they want to claim they're going to do broadening. Companies that I'm talking about, such as Tesla and Amazon, they are not in the tech industry anymore. You have those other companies are in the tech industry, tech sensitive. So again, tech and healthcare was doing good, and in the pandemic, everything that was non-essential was not doing good. So now fast forward to the present, we have AI that has done so well. We have pretty much everything else has done well. We have right now, they say this whole broadening. We had the AI boom, and then the last few years, the negative aspects were the banking crisis, which was the banks, and then we had real estate. And then the third one, I think I'm a little concerned about. It's not consistent or something to worry about too much, but it's on and off peak. Travel and leisure. That's a sector that I think people should try to stay away from. I know people like to travel and do all that, but again, certain areas and certain activities are closed during certain times of the season. For example, in Colorado, ski resorts, they're closed during the spring and the summer. Who wants to go to ski resort in the summer? It's not coming. So, in other places as well, again, when people travel, people like to travel out of their state. So, obviously, there's a lot of spending. But again, that can only go for so long. We only have vacation up until we can afford it, or up until we think we can afford it, or whatever the case may be. So when it comes to business, that's doing positive. AI seems to be supposedly still in the growth stage, it's still doing pretty good. The next one, gold, has been breaking out as of late. And then oil and gas. Oil, with doing deals with Saudi Arabia, U.S. is trying to gain allegiance. I want to say allegiance, but gain commonality. And they're trying to stay on good terms with Saudi Arabia because they have so much oil. The whole impact with the Russia-Ukraine, they're putting tariffs on these countries that they don't want to do business with. Then we also have, China in the mix, that we buy everything from China, and this much we buy from China, and we only buy this much. They only buy this much from us, so it's not fair play. I don't know what we're doing wrong, but this shouldn't be like this. So that leads me to believe that the next trends, again, will still be the AI, but we gotta watch out for the deep fakes. And again, Tech would do okay, but again, gold is going to do really good. I believe insurance, any kind of insurance, whether it's life insurance, healthcare insurance, any type of insurance is going to do good. Pick some good names, good balance sheets, good overall, good financials. Top line, bottom line has to be really good. Net income for sure has to be uh, positive, and especially cash flow positive overall. And then again, that net income needs to be uh, sustainable for them to be more than their whatever they have for their minimum cash flow. The net income should be more than that to cover that if they have negative cash flow. So aside from that, you know, we have specifically, I said commercial real estate is bad. Stay away from that. The good ones to look out for now and in the future, again, insurance, gold, and then oil and gas. Those are very defensive and very offensive as well. So that's all I have for you guys. Thank you guys for watching. I'll see you guys in the next one.